in the banking industry for the past 30 years. So I always look forward to spending time with groups like yourself to talk about issues that are important to me. I want to thank you all for the important work that you do protecting vulnerable adults in the various capacities that you serve. So thank you for being here with me today. I'm going to bring up, Laura, I will share my screen now and do my best to do this correctly. And let's see. There we go. And so I want to preface everything that I'm going to say by every bank is different. They do things a little differently operationally, have different policies, have different complexities and different capabilities in what they can do because of their asset size. And here in North Carolina, we're very fortunate to have a diverse banking system. We have some of the nation's largest banks headquartered right here. And but we also have some very, very small banks that have 5 or 6 employees, and we love them all, and they all do their server role, and they all do great work. But their size and their systems vary greatly. And so I'll address that as we go through my remarks. I want to start just with the issue of elder and disabled adult exploitation and financial exploitation and the demographics and prevalence of those issues. You all work in this area, and so this information is not new to you. Every presentation I give, I think it's important to remind ourselves of the importance of the issue and the size of the problem. Our population is aging, and they outnumber they will outnumber the number of children in America by 2034. People born before 1965 hold 70% of the bank deposit balances in America, according to the ABA. And so that's where the money is. So that's where the crime and the exploitation will take place. Financial exploitation of vulnerable adults is a big problem, ranging from 2.9 billion to 36.5 billion on an annual basis. And the statistic that troubles me the most, and I think this has to do with pride or the feelings of shame in being exploited, is that a recent study showed that for every 44 cases of elder financial abuse, only 1 is typically reported. It's terribly underreported. And so we only know what we know. And what we do know is that the problem is bigger than what is reported. Who commits financial abuse? A 2019 analysis of suspicious activity reports, and I'm going to talk about suspicious activity reports in more detail toward the end of my presentation. SAR reports, as conducted, the study conducted by the CFPB, the Consumer Financial Protection Bureau, found that victims of elder financial abuse lost an average of $34,200. That's a lot of money for most senior adults. In the CFPB analysis, what's even more troubling is that the dollar amount lost was greater when the suspect knew the victim, or when the victim knew the suspect. Smaller amount when the suspect was a stranger. And a pretty big difference in those two numbers: 50,000 for someone they knew, 17,000 for someone they didn't know. And then the New England Journal of Medicine gives us a sense of who the perpetrators are. And there's no surprise in what some of these characteristics are, but they're here for you to read. And I have shared my slide deck with the organization, and that you'll have access to these for your future reference.
Peter, I'm so sorry to interrupt. It looks like there's just a box over your slides. I didn't know if it's something you can click to make it go away.
Oh,
Perfect. Yes, thank you.
I'm sorry. That's not on my, I have two screens and that's not on my main
Oh,
screen.
okay.
I'm so glad you mentioned that. Thank
Oh,
you.
thank you.
We have a great relationship with our North Carolina Attorney General. Josh Stein and his whole team are just excellent to work with, and they track the fraud schemes and the scams that are happening around our state. And so I just wanted to outline them for you in case you haven't seen the most recent statistics. In the fourth quarter of 2020, these are the scams and schemes that were perpetrated on North Carolina vulnerable adults. The sweepstakes scam, that was the largest dollar amount lost, where there's some kind of someone calls the individual, the victim, the potential victim, to say you've won money, but you're going to have to pay to receive it. And we had 34 reports, 12 victims, and $790,000 lost in that. I've received this call many, many times. And Attorney General Stein is working diligently on these cases. The next is a sweetheart scam, and this one breaks my heart. We had where there's an out-of-state online relationship or overseas relationship even in many cases, and you've probably heard of these firsthand or seen them portrayed on Dr. Phil or on other shows. The person in the relationship who's overseas or out of state needs money for an emergency or to pay for a trip to come visit the victim, and the person finds out that there's really no one there. It's someone who's just taking them for all their money, as much as they can bilk them for. $407,000 lost just in the fourth quarter of last year to this. The Social Security scam, where you need to pay to receive your benefits. I tell everyone, the Social Security will never call you. They only work through the U.S. mail. They don't email, they don't make phone calls. Unless you receive an official letter, it's a scam. And I encourage everyone just to hang up on them. I like to play with them, so I take them as far as I can go, and then they usually hang up on me. But we had 60 reports in the fourth quarter for $107,000 lost, just lost. The grandparent scam, you've all heard of this. In the fourth quarter, we had 13 reports, only one victim, but $72,000 was lost in that one case, just in the fourth quarter. That's where a grandchild is in jail or in trouble, many times in another state or in a foreign country, and the grandparent needs to wire money as quickly as possible to help the child. And what we do is, and I'll talk about this some more from a banking perspective, is many times this can be caught with just a phone call to the child or to the child's parents. But too often, the grandparent just reacts and wants to fix the problem as quickly as possible, and then the money is gone. And then lastly, the government grant scam. There were 13 reports of this for only $6,000 lost, but still that's lost money where someone has received a grant, much like the sweepstakes scam, but you have to pay money to receive it. Anytime you have to pay money to receive something, it's usually not legitimate. And so these are the most common. There are many other schemes and scams that are going on in our state and around the country, but these are just the ones with the most prevalence. And so what can customers of banks and family members do to protect their loved ones? One is to ask the bank about view-only access to a family member's bank accounts. That gives you no control over the funds or the account, just awareness. But just having that ability to check the bank statement on a monthly basis, just to review the transactions and look for things that are unusual or out of sorts for that family member, can be an extremely important and valuable tool to have. Next is to ask the bank about duplicate statements that can be sent monthly to a trusted family member. Once again, just like the view-only access, there's no control of the funds over the account. The person who receives the duplicate statement is not a signer on the account. It's just done for awareness, and banks are happy to do this. You can also ask for high dollar transaction alerts that can be sent to a trusted family member. A lot of internet banking apps and mobile applications allow for this, where the family member can select the threshold for transaction amounts that would be normally out of the ordinary for their family member. And anytime there's one of those transactions, it triggers an alert, and then the family member can call the loved one and ask about the transaction. So that's another important tool that you can ask a bank about if they have the capability of providing this. And then lastly, a family member can co-sign on a loved one's account. That gives the family member complete control of the funds on the account. When you co-sign on an account, when you're a signer on an account, you're also the owner of the funds, co-owner of the funds. So you have complete control. So this is the kind of thing that needs to be done very carefully, thoughtfully, judiciously, because this is where exploitation can creep in if the family member who co-signs is not a trusted person or potentially has financial stress or some of the characteristics that were mentioned in the New England Journal of Medicine study. So what is a bank's responsibility under North Carolina law? North Carolina has been a leader in this area nationally as state legislation goes. Banks under this section of the law have a duty to report suspected fraud. And so I'll just go over this, bear with me. I think it's worth, I don't want to read to you, but I think it bears some attention so that any financial institution or an officer of the institution or employee, if they have reasonable cause to believe that a disabled adult or an older adult is the victim or a target of a financial exploitation scheme, they're required to report the following information. The person, the customer that is being exploited, they can choose to contact a trusted person on the account if they feel that the person is not involved in whatever the exploitation is. So they are to do that if they think that's a safe person to call. Of course, if they feel that the person is involved in the scheme, then they won't contact that person. They're required to contact the local law enforcement agency. That's based on where the jurisdiction of where the older person or the disabled adult lives. So they're to call the local police or sheriff serving in that area. And then in the case of a disabled adult, they are to contact the appropriate county department of social services. The report can be made orally or in writing. Most banks want to do everything in writing, but they can call the Adult Protective Services or the sheriff or the police department to notify them of their suspicion of an exploitation scheme against a customer and give all the appropriate information. And they can do that because a very important part of our law that was important to us as an industry is that banks and bank employees who act in good faith in making these reports are not liable for any action for doing so. In other words, customer information is so private and so carefully held confidentially by banks that for them to share information goes against everything that we do every day. But in the case of suspected exploitation of a vulnerable adult, we've been given this liability protection so that we can share information when it's done in good faith and for the benefit of the customer. This is very important, and we're very pleased with this law. And so what are banks doing to address financial exploitation? I talked to a number of bankers in preparation for this presentation just to make sure I had the most recent initiatives and activities that they're using. And so I want to share them with you this morning. They're in 4 categories that I've taken in general from talking to all the banks. And these include some of our largest banks that you know, Bank of America, Wells Fargo, and such, including some of our smaller banks as well. First is suspicion and identifying. Banks spend a great deal of time and energy and focus on training their frontline employees, the people in the branches, because that's where most activity is detected. When a customer is being brought in by a controlling family member or someone that is not normally with the customer, and the customer looks uncomfortable or their demeanor has changed, employees are trained to identify these things, and they're trained to, like we have said with terrorism, if you see something, say something. They're taught to say something and do it in an appropriate way, in a discreet way, so they can get to the bottom of what's happening. I have to emphasize how I want to use the word awkward, how difficult this is for a frontline employee, because they're working with, in many cases, an adult that they've worked with before, and to question their capacity to do a certain transaction or that something could be wrong. This takes training, and this takes confidence, and that the training brings. And so banks spend a lot of time and energy in this area. Next is prevention and detection. And these are the things I spoke about earlier: the trusted contact for account access, duplicate statements, and high dollar transaction alerts. These things can be used to detect and prevent exploitation from occurring, or catch it as it's occurring. Banks are also using life cycle education. So whether you're a younger customer, a boomer customer, or an older customer, they push out through their websites, their online banking applications, different information that applies to those different life cycle groups. And many times for older Americans, they're focused on just all the things they can do to protect themselves from exploitation. And then next in this area of prevention and detection is wire transfer education. The tricky thing about wire transfers is once the money is sent, it's gone. It's gone forever. It can't be retrieved. And so banks have really stepped up their wire transfer education. And for those of you who send wire transfers, you've noticed this. You have to answer questions. They verify that you know who you're sending it to, and you know the account at the bank that you're sending it to, because there's no do-over with a wire transfer. And so it's the #1 highest risk transaction in banking today. And I send wire transfers personally, so I like them, I use them, and I know who I'm sending them to. But I have to go through that routine every single time with my bank, even though they know who I am and they know what I'm doing. They know, and I know, that there's not a do-over if I'm reckless or moving too fast on a wire transfer. And wire transfers are where the grandparent scam, and so many of these involve wire transfers. Once the money's gone, can't be retrieved. Next is servicing. This is where a bank has the ability to delay a transaction if they believe that it's not in the customer's best interest. They're doing something that's out of the norm and is probably suspicious. They can delay that transaction so that they can call a trusted contact, or they can call APS or law enforcement. But at the end of the day, the customer might just say, look, I know what I'm doing. I've got this. Just do what you're told. You know, I'm your customer. Do what I'm asking you to do. But if the bank just feels strongly that this transaction is fraudulent, it's not good for the customer, they have the right to close the account. They do this sparingly. It's not something that they want to do, but what bankers have told me is they rather close the account and potentially offend a customer rather than be party to a fraud and have that money lost because they didn't do everything that they could do to protect them. So they will close accounts for customers. And then lastly is reporting. Banks are required as I just mentioned under state law, to report suspicious activity of any dollar amount to Adult Protective Services or law enforcement. And then over certain dollar amounts, which I will speak about in just a minute, they have to report to the Financial Crimes Enforcement Network, FinCEN, through these suspicious activity reports. So there's a great deal of reporting going on in the banking industry to the appropriate law enforcement agencies. Right now, banks are taking financial exploitation of vulnerable adults very seriously. Large and small banks are engaged in peer learning, where they visit with one another through peer groups to talk about what they're doing respectively at their banks. They're talking about what they're seeing in terms of trends and scams and schemes that are being perpetrated, so they can be on the lookout of the latest innovation in crime. They're also, and this is particularly in the large bank world, they're collaborating with the Department of Justice at the national level, the U.S. Department of Justice, and the Consumer Financial Protection Bureau's Division of Older Americans. They're discussing what's happening nationally, what they're seeing, and they're sharing information among themselves at a higher degree than we've seen in our industry in history. And then there's a great deal of information and training that is being provided by state bankers associations like the North Carolina Bankers and the other 49 associations across the country, and through the national associations like the American Bankers Association, the Independent Community Bankers of America, the Consumer Bankers Association. We are all in this together, and we are all committed to helping our members, banks of all sizes, be as effective in their protection and prevention of crime and protection of their customers as possible. So I've been asked specifically to talk about suspicious activity reports, SARs, as commonly known in our industry. They were created by the Bank Secrecy Act of 1970, and there are triggers for SARs. If there is an attempted or a completed transaction of $5,000 or more where there is an identified suspect, a bank is required to file a suspicious activity report. If there is no identified suspect, then the threshold is $25,000. The Financial Crimes Enforcement Network, FinCEN, was created in 1990. It's a division of the Treasury, and the intent was to create more focus on the information in suspicious activity reports and be more effective in crime prevention and apprehension of individuals perpetrating crimes. What is very interesting is that FinCEN has 120 or more SAR review teams across the country. They consist of FBI, Secret Service, local police departments, a very diverse group of individuals who look at the SARs that are filed. So these SAR teams review them, and if appropriate, then they assign them to a prosecutor. Many in banking and outside of banking think that SARs they're completed and they're filed with FinCEN and they just go into a black hole. That is far from the case. They are used by these SAR review teams and then prosecuted when appropriate. Banks are examined for Bank Secrecy Act compliance and the SARs that they file and the other reports that are required under the Bank Secrecy Act. And there are significant penalties for noncompliance. Banks take this very seriously. For a small bank, it's not uncommon to have 2 or 3 employees focused on Bank Secrecy Act compliance and suspicious activity reports. At the larger banks, they have hundreds of employees doing these and focused on Bank Secrecy Act compliance, just to get it right, for all the right reasons, to protect their customers, but because there are significant penalties for noncompliance. And as I mentioned earlier in the previous slide, by comparison, where every attempt or transacted suspicious activity is reportable to the state through law enforcement or APS, there are no triggers or thresholds on the state level. So on the state level, you're seeing everything. When it comes at the federal level, we have these $5,000 and $25,000 thresholds where there's an identified suspect or not an identified suspect. And so putting myself in your position, humbly doing so, I came up with this slide by asking bankers, knowing the audience of this conference, what could I tell you? That was my question of them, is what could I tell you to help you be more effective in working with them, the banks, to protect the people we're trying to protect? And so the first thing they all said was develop a relationship with the banks in your area before you need them. And you probably all already do, but you want to have a relationship of trust and you want these to be people that you know and that you can contact whenever you need them. And then when you do contact them, when there is a suspicious activity, provide specific information and context when asking a bank for information about a suspected case of exploitation. They want to help you. And the more that they know, and the more that they know about what you're looking for, the more helpful they can be. One specifically said, don't ask me for 6 months of bank records or a year of bank records and not give me the context of what you're looking for, because I might be able to look more specifically into the account in 1 month or 2 months or a particular month and find exactly what you need. Now, they're happy to give you all the records that you ask for, but be as specific as you can and give them as much context as you can. You don't always need a subpoena to get customer information from a bank. What bankers are telling me is that when they receive a subpoena, it then typically has to run through their in-house counsel, or if it's a smaller bank, their outside counsel, and it slows the process down. They want to help you as quickly as they can, which goes back to the middle bullet point on this slide, is if you just call them and give them context and specifics, they will just help you. But if you do ask for a subpoena and present them with one, then it's going to slow the process down. But sometimes they're just necessary, so they understand that. Just remember that state law allows the bank to share customer information freely with you, and so there's no fear of exploitation, of liability, or claims that they violated a customer's personal information or the confidentiality relationship that they have with their bank. And so this brings me to the end of my prepared remarks. What I would like to do is take your questions and also hear your feedback that I can go back to our member banks with, because we want to be partners with you and help you in every way that we can. And so, Laura, I will just toss it to you for any questions you've received in the chat box, or if you want to unmic someone that they can, we can just talk.
Sure, that sounds good. I do have a few questions in the chat. The first question is from Mary Bethel, and she says, does the bank have the customer's permission at any point to call a trusted contact if they feel the customer is at risk? Also, what if the bank knows who the trusted contact is, but the customer has not given their permission for them to be a trusted contact?
My understanding, great question, and thank you for that one. The first part is, does the bank have the customer's permission to call a trusted contact if the person is on the account? And my understanding is that yes, they do. Otherwise, the person wouldn't be on the account. If the trusted contact, the family member, is not on the account, then I would be careful in reaching out to someone who is not listed on the account. I'm not an attorney, nor do I play one on TV, so I want to be very careful about giving legal opinions. But I don't believe the bank would call a family member if they weren't listed on the account. They would probably call Adult Protective Services or law enforcement if there was suspicious activity.
Yeah, this Mary Bethel, I'll just clarify a little bit, because in a lot of small communities, a lot of the bankers know a lot of the people personally, so they know who mama is and they know who mama's kids are, that type of thing. So
yeah,
it's,
and that can be Mary, that can be a really good thing. It can also be very risky in a small community where everybody knows everybody. Word gets out that the bank is sharing confidential information, it can be damaging. And so the bank will be very cautious about doing that.
Debbie Lee also had a great question. She said, when APS is investigating reports from some banks, the process is delayed since the specific staff person who noticed the irregularity is not necessarily the person who completed the report form. And she just wants to know if you have any suggestions for that.
So the person who completed the report is not the person that APS is following up with. Is that?
I'm sorry, this is Debbie. Thank you for taking the question. Our experience is that in the bigger banks, a frontline teller, for instance, is the one who noticed the irregularity. They report it up the food chain, and they have a person who completes the mandatory report forms and sends it into the party. When the APS does the backtrack, the only person that's available, of course, is the person who submitted the report, who knows nothing about what happened and cannot actually identify who the person was at the teller station. So the investigation is inherently just stopped.
Yes. And I don't know the solution to this, but I do know why banks do what they do. They the person who fills out the report is the person at the front line who reported it internally, is a teller who's gone through the training, and they do as much as they are allowed to do. Then the actual reporting to APS or to law enforcement is done by the person who specializes in this in a central office. I mentioned the large banks have hundreds of people who do this, this is all they do every day. They're trained, they're educated in this area, and to the extent you can, it slows it down. I would expect to make the connection between the teller and the central office that's doing the reporting, but a communication internally is what needs to happen.
Yeah, more times than not, our and I'm part of an MDT in Mecklenburg County, more times than not, the investigators are being told that they don't know who that person is, that it was just like, teller 72 in Burlington, which is not in our region, obviously, but they just don't know who that person is.
Well, I will share this with the larger banks that I spoke to and about their processes and procedures, and I'll share this with them, and perhaps that might require them to address who's reporting and how to get back with them. It sounds like a process issue. But thank you for the question and for highlighting this, and this is something I can go back to them with. And that's something I wanted to do today, was to learn and find out where the points of friction are.
Nancy has a great question. She asks if you can speak to what's being done to ensure that the local law enforcement understand their responsibility to respond to these reports coming from the banks.
We have identified this as a missing link, a challenge, and I have talked to Attorney General Stein about developing training for all components in the link. So you have the bank needs to know what they're responsible for and what they're liable for. Law enforcement needs to know what they're responsible for. And we need to come up, working with the Attorney General, we've talked about coming up with some training that tells everyone in the chain of events dealing with suspicious activity, what their role is and what their responsibilities are, and what law enforcement can expect from a bank and what a bank can expect from law enforcement. So that's something we're working on. We haven't made the progress that I'd like. It was before the pandemic, I sat down literally in the Attorney General's office and we spoke about this, coming up with a video training tool or something, and then the pandemic hit and we've been working on other issues. So we'll get back to that. Great
Sounds
question.
like a good project.
Yes, we were looking for something else to do, but it's very important. I don't mean to make light of it. It's very important.
Let's see. Christina has another good question. She wants to know if there have been incidences where the tellers working at the banks are taking advantage of the elderly customer.
I'm not familiar with any specific incidents. I'm sure there are, because where there is money, there will be greed and temptation, and where that has happened, as my experience in banking tells me, you're 1 year, one audit away from being caught. And so most criminals don't think that far ahead, whether it's a teller, a loan officer, or anyone else in the bank who is trusted in a fiduciary responsibility. It's a high calling, and we have great expectations of them, and they will be prosecuted and caught. So yeah, I'm not familiar with specific incidents, but where that happens, they're not far away from being caught.
With so much online now, I mean, personally, I can't think of the last time I set foot in a bank. Do you find that it's harder to if I don't have a relationship with a teller, do you find that it's harder to recoup those money from those scams and whatnot if you aren't going into a bank?
Well, that is where the duplicate statements and other things like that. My mother was 81 before she passed away, and I had view only access to her account, and my sisters, I love them and I trust them, but as Ronald Reagan taught us, trust but verify. They had access to her accounts. They actually were signers on the account. But I love them and trust them, but I checked my mother's account monthly just so I could see what was going on. And we didn't have any issues, but I would have known about it if we had. She didn't go to the bank that often either. A lot of her work was paying bills online and things like that. Had she, let's say she was a widow, so had she gotten involved in an online relationship and was being exploited, I would have seen that. If I didn't have a high dollar trigger on the account for notification, but I would have seen that. So there are ways to watch that in a digital world. We're seeing older Americans are using mobile apps and internet banking more and more. It's more and more prevalent every month, and the pandemic accelerated that shift.
Joyce Evans has a good question. She wants to know if the account holder has several children, can they all be co-signers on the account?
Yes, there's no limit.
Melanie says, let's see, I think it's just a comment, but I can read her comment. It says, elder client had allowed her daughter to take care of her finances. Client's daughter not only exploited her mom, but her actions also resulted in the bank accessing several $1,000s in overdraft fees for the course of a year. I contacted the bank manager, who had no desire at all to even entertain reversing these charges. Over a year after the client severed daughter's access to client's account, even though there were no further overdrafts, the bank still did not want to offer the refund. It is hard for me to understand why the bank needed all of these overdraft funds.
Yeah, that's unfortunate, and I'm sorry to hear that incident. It's hard to defend, and I'm not going to. But the first part of the comment, it was an elderly person's daughter took advantage of her and exploited her. And what's unfortunate is that that's very common for family members to just say, well, this is our money now, and I'm taking care of mom and I'm helping her and all this, and I'm not being compensated. I'm just going to help myself to this or that. And it just happens. Now, when it gets into a situation where there's no more money and it's overdrawn, then that's where the right thing needs to be done, and I can't defend that particular situation, and I won't. But I do know that the CFPB, Consumer Financial Protection Bureau, is looking more closely at overdraft fees and fee income in general on bank accounts. And you'll see banks moving away from overdraft as an income source, more using it more as a deterrent for overdrawing. Great. Thank you for your comment, and I appreciate you for offering that.
And Mary Bethel has another good question. She wants to know if the bank commission can intervene in consumer protection cases.
Anytime there's a situation where it looks like a bank has violated the law, or at least has stepped out of bounds in some fashion, you can certainly report them to the appropriate regulatory agency. And so not every bank in North Carolina is supervised by the Office of Commissioner of Banks, which is the banking commission in common terms. If it's a national bank, if the word national is in their name or the initials NA are at the end of the name, it's a national bank, which is regulated by the Office of the Controller of the Currency, the OCC. If it's they're also, the Federal Reserve could be the primary regulator, or the FDIC could be the primary regulator. So you need to go to the appropriate regulatory agency for this. They all have offices that handle complaints, consumer complaints, and they deal with those in the appropriate fashion. You could also go to the Consumer Financial Protection Bureau, because that's why they were organized. So there are a number of different routes you could go.
I was just curious too. I know you said that it's impossible to get money recouped from wire transfers, but if it's any other method, like I don't know, let's say a scam of some sort, is it possible for customers to get their money back? And anyhow?
It's very difficult. Now, banks will work diligently to recuperate money. Sometimes with credit card transactions and debit transactions, there can be recuperation. It's just, and wire transfers are just the most difficult to recoup, because the money it goes to an account that's been set up particularly for this crime, and then that account is swept immediately to another account. So there's just no tracking it. The bank will do everything it can, working with law enforcement, to do that, but the chances are slim. And that's why there is so many precautions on the front end of a wire transfer.
What got you interested in this line of work?
When I was at the Louisiana Bankers Association, I was involved with an organization called the Senior Housing Crime Prevention Foundation, and we provided crime prevention programs in nursing homes all over. The organization provided crime prevention programs in nursing homes across America. And after Hurricane Katrina hit Louisiana, I had been there 17 years. I was worn out, and the foundation asked me to come to their organization in Memphis and scale it nationally. And so I did. I moved there and I worked there running that nonprofit for 7 years. And I was in senior care facilities, assisted living, nursing homes, talking to family members almost every week, all across the country from Hawaii to New York. And that was my passion. And the North Carolina Bankers Association was involved with that group as well. And there are a number of sponsored facilities here in the state. North Carolina Bankers asked me to come here at the beginning of 2015, and I fell in love with the group and the people who run it. And so I've been here ever since. But my passion has not changed. I will speak to any group, meet with anybody who wants to talk about elder financial protection. And our Attorney General and I have found a common passion there. So it's been a good relationship. So thank you for the question.
Yeah, well, Mary Bethel was going to took the words right out of my mouth. We're really happy that you found NC.
I am too.
Debbie says, thank you so much for all of your passion and knowledge.
Well, thank you. Thank you very much. And I would look to you also. Laws that are on the books, like the one I described earlier, are there because we collaborated with the Attorney General and other groups to find the right language that protected banks, but also protected customers. And no law is etched in stone. It can evolve as banking evolves, as our economy changes and digitization and all the things that we've done in banking. So where we find points of friction and things that need to change, that's why I like to stay in touch with groups like yours to learn and be able to go to the General Assembly and say, here's some things we need to look at. So don't ever hesitate to raise your hand and say, we're having a problem in this area. Maybe we need to change the law. Doesn't mean throw it out. It means make it better.
I think there's one last question from Rosalind, and I don't know the answer to this. I don't know if you know the answer to this, but we can just throw it out to the group for sure. She says, I know the direction of the conversation is specific to banking, but are you aware of any incidents or have any knowledge of a GOE and GOP charging astronomically fees to their wealthy clients? Also, are you aware of a GS that establishes a maximum amount that can be charged to wealthy clients by their GOE and GOP?
I'm not familiar with the acronyms.
Rosalind, if you want me to unmute you, or if you want to take yourself on mute, off mute, I can.
It's guardian of estate and guardian of person.
Okay.
Okay. That's not my area of expertise, so I really can't speak to it.
No, that's okay. Yeah. Does anyone have any suggestions or advice for Rosalind? Joanna says the clerk's office has to approve commissions and they are capped at 5%.
Very good. Very good. Yeah, my in-house counsel told me in relation to this presentation, stay in your lane.
Well, can anyone think of any other questions for Peter? If not, we're so thankful to have you for a fantastic presentation. Thank you so much. This was really helpful.
Well, thank you, Laura, and you and the rest of the team have been fantastic to work with in preparation for this. And just know that we're always standing by to help. Anything we can do, just let us know.
Okay, that sounds great. Well, if everyone just wants to go to lunch a little early, you'll just want to stay in this room here, and then we can move you back into the main break room. So you'll just come back. Our next presentation starts at 1, so just be back a little bit before 1. All right, well, thanks again, Peter. Take care.
Thank you, Laura. Thanks, everyone.